Hello, Chris Green here over at the Flood Insurance Guru. Today we're talking about mortgage forced flood insurance. What is it? Can it be transferable? Can it be canceled? We're going to talk about a few of those things today. First of all, if you own a home, you may have heard of mortgage forced home insurance. Let's just say that your home insurance has been canceled. And what happens is the mortgage company does what's called forced placed coverage. And what they do is they put that coverage in place to protect themselves. If your house was to burn down, they need to know that that loan can be paid off or the house can be rebuilt. So what happens is it covers just the structure. Well, forced placed flood coverage works in a similar way. What happens is if the property floods, the building is going to be covered. The problem is this policy is not going to be through the National Flood Insurance Program. This is going to be through the mortgage company. And generally, this is only going to happen when it is a non-federally regulated loan or, like a conventional loan or something like that. Because if you have a government loan, it's going to have to go through the National Flood Insurance Program until July of 2019. So what happens if you have forced placed coverage? Just this week, we had a customer, they thought they had a policy through FEMA, but it was actually through the mortgage company. It has been for several years. And so what happened is a few weeks before closing, they found out this policy was not transferable because this is something the mortgage company did on their own. So mortgage forced placed coverage by a mortgage company is not transferable. And this is very important because if you have a flood zone that's changed over the last few years, you might be looking at a much higher rate when that new person goes to take on that policy. You can no longer grandfather that rate, even though you may have had it through your mortgage company for a few years. So it's very important to think about this. Now, when it comes to being refunded with the mortgage company, generally the mortgage company is only charging you a month-by-month basis until your loan is sold. So that part should be refundable. They're only going to pay for what you have because the loan's no longer going to be there. But this is something you really want to pay close attention to when it comes to forced placed coverage. Because with forced placed coverage, your contents generally is not going to be covered. You're not going to have additional living expenses. I said really the only thing that's going to be covered is the bank's interest. So it doesn't do a very good job of protecting you. It just does a good job of protecting the bank. So if you've got questions about maybe you've got a forced placed flood policy and maybe you didn't realize it, you want a little bit better coverage, a little bit better pricing, then please reach out to us. FloodInsuranceGuru.com. You can go to our YouTube and our Facebook channels where we do our daily flood education videos, The Flood Insurance Guru, or you can give us a call, 205-451-4294. Thank you.